to be fair to American automakers, look how much better American automobiles have gotten since the 80s. And the main driver of that was Japan.
Yeah, 100%.
I mean, until Japan entered the market, U.S. automobile manufacturers were fine with a vehicle life being 60 to 80,000 miles.
The best thing you can do to make things better is allow competition. That's just bottom line.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk.
And we are back with another edition of the Daily Dots. And I am not yet joined by the brain trust himself, Mr. Chase Taylor. He'll be joining us here in a little bit. And part of it's because we're doing the weekly show, so it's going to be a little bit longer than normal. Try to keep it 45 minutes to an hour. Got a lot of stuff to discuss. This week, a little bit more than others. And anyway, we're still about 10 minutes from the close, and our on-site trader is on a little vacation, and when he is off duty, Chase fills in that role for us. So he's got to be there right till the bitter end. So anyway, he'll join us. We'll get to that, but that's fine. Several things we want to do and discuss prior to getting into it with Chase. Lot going on. Interesting. I don't want to jump the gun here, but I thought there was an encouraging thing, at least for me, that happened this week. And that is that Steve Mirren, if those of you that have been listening to our show, hopefully you've heard him before. I've had him on here. I've probably interviewed Steve for about 2.5 hours. Bumped into him on social media. Hit it off ideologically. I don't know him well. I mean, we're not on a personal basis or anything like that. But he just got appointed to the Fed Board of Governors. It's a short-term appointment. But it kind of looks like one of those that could be a longer term. Anyway, we'll see how it ferrets out with Steve, and we'll get into this conversation a little bit later. But I just, for one, am very encouraged that those are the kind of people that this administration is putting forward, because I really think that he's pretty close to the outline of what you'd want as a Fed governor. And what I mean by that is, look, I want somebody. I think all too often guys like me get too on the side of beating up on academics and minimizing the role that they play. And look, that's not at all the case. I want people that have studied economics. I want people that are up on the greatest and latest theories in economics. We need those kinds of people making those calls. We want our best and brightest. But when you're making decisions like monetary policy that affect such complex systems like the global financial system, economies, right? Not just ours, everybody's. You need all kinds of knowledge involved in that. You need diversity of thought. That goes to a cultural thing, right? It kills me when people, we need diversity. I'm like, look, guys, what you need is diversity of thought. I don't care about color, okay? I don't care about your ethnic background. And why you don't care? No, because look, you can have two people of the same ethnic background with completely different experiences growing up. Maybe one of them's dad was a software engineer that got a $100 million signing bonus from Meta, and he lived in Bel Air. His parents have Indian accents because, they were born there, but he's lived with a silver spoon and a chauffeur, right? So what you need, and that's what irritates me, you don't value diversity, not the kind you're talking about, because it's meaningless. I think race, as far as skin color goes, is chalked up to the amount of melanin in your skin. And I don't think that's an outrage. It's kind of factual, right? It's not really an outrageous statement to say that. But, this fake diversity that we've talked about, or what, like, who cares? I don't know. That's just me, though. I'm still stuck on that whole judging a man by the content of his character and not the color of his skin. That's kind of my idea of Shangri-La, but unfortunately, not everybody else is. Anyway, enough of the rant. Going back to Steve, though, that to me is true diversity of thought. First of all, Steve was not a silver spoon kid. Second of all, he's actually run a hedge fund. He's a practitioner. He's executed and worked in these markets and traded these markets. And why is that important? Because economic theory is far different. And I'll just tell you firsthand, I'm not embarrassed to admit it. I studied finance and economics in college, majored in finance. I think it was like 2 credits short of a minor in economics. I thought many times about going back and getting that double major in economics. And the reason I didn't was because I got more experience. And I realized that the study of economics is really, it's not a science, and it's not done by scientists. It really is a game of observations and post facto fitting descriptions to what happened. You know, I know that seems kind of wordy, and I'll try to break it down in more concise cases. Economists are not scientists as much as they'd like to talk. You know, I've heard someone try to describe it as a soft science. It's not a science. And it's not a science because studying human behavior is not. Look, you can have human behavioralists and, you know, psychotherapy. I'm not saying there isn't science around it and involving it. What I mean is, if you look at human behavior, you know, it is not it's not one of the rules of thermodynamics, right? It's not a hard science in the sense that you can, if A, B, and C happens, then you can bet on M, right? It's not the way it works. And most commonly, what you see, and this has to do with this, a lot of market participants too, but you see it especially with economists, is it's always post facto, right? It's always, oh, well, who could have seen that coming? And you're sitting there going, well, I don't know, man. You're the economist. If you don't have a better insight into what's coming than I do, then really what's your point here? And I just don't think enough of them are aware of that. Now, then when you operate and act and you know, execute and become a practitioner, so much more of these things land. You know, so much more of these things make sense because you sit there and you see the gap, you see the spread between what the intention or the thought was and then what was actually happening on the ground. And a great way to illustrate this was said by Bernanke himself after I believe it was after he gave up his position of being the head of the Federal Reserve Board, but or the head of the Federal Reserve in general. But he talked about how, and listening to him explain it, I actually had more sympathy for him. But he talked about how they believed that the wealth effect would ignite the underlying economy. So they were not, guys like me were raging coming out of 08, 09. Look, all they're doing is targeting asset prices. This is stimulus that only helps the top end of the curve, not the bottom end, so on and so forth, right? All the stuff that we've talked about for years now. And he acknowledged that that was the case, but then he also said they thought that that would trickle down. And guys like me at the time, being a practitioner and looking at it through an investment lens, were saying, wait a second, you've by doing this the way that you're doing it, you're incentivizing the biggest players to do financial transactions and financial engineering because it is gains sans risk, right? There was ways to manufacture profits and higher stock prices and higher asset prices without actually having to have significant capital outlays or significant capex. An example is this. If I decide to, let's say I decide to borrow money because I can borrow money at 2.5%, my stock currently pays a 5% dividend. Okay. Right out of the gate, if I go borrow that money and buy back that stock, I can tell you next year, just off that alone, how much more lands on the bottom line just via dividend payments retained because of those share buybacks. Also, I announced a big buyback that juices my stock. Add it all together, we had a decent year. Revenues were up 6%. Look over at the stock price, it's up 30%. Now, I could just do that again for another year, kind of rinse, wash, repeat kind of deal, or wash, rinse, repeat. Or we could go do splash, 5 or 6 billion capex in a new manufacturing facility that we hope we have the demand to max out, right? Now, you know what? I think I'll just continue on buying back the stock. It seems like a safer bet. After all, I am a CEO. After all, 80% of my net worth and 75% of my pay is stock options. Everybody wins. Shareholders are happy. Employees are happy. Stock-based comp, right? I'm happy. Versus what if I go launch that factory for $5 or $6 billion and it doesn't work? Stock gets hit, right? So Bernanke acknowledged that, and he acknowledged that that was the part of it they never saw, which I tip my cap to him. And that to me is like a perfect illustration because and the reason I say it's a perfect illustration is because at the time, and look, I'm not at all sitting there saying it was me. As a matter of fact, I guarantee you I stole that from somebody in some way, shape, or form. My point is, though, having that different perspective, being on this side of the desk, looking at the markets in a way of going, okay, I need to understand exactly how this is going to impact this, doing the work, walking through it. And you're sitting there going, this isn't going to result in higher economic activity. It's going to result in less real economic activity. Why? Because you're incentivizing financial engineering. Inadvertently. They didn't think they were. They then learned that that wasn't the case. Where I think a guy like Steve Mirren, who has managed money, has had to look at the realities of these things. I think he's going to be much more likely to have a more grounded approach, an approach that's more, again, more practitioner based, more reality based. And once you get into this, and I know you guys aren't studying and reading this stuff every single day like wonks like us are, but you see these mistakes made by the economist class over and over and over again. Right? They were not the singular cause of 08, 09. Should they have seen it coming? Yes. But, we all remember the Bernanke statement in 2006, the problems in subprime are contained. That is only an outlook you can have if you are not a real hard nose to the grindstone practitioner, or maybe you're a Pollyanna. And there have been times where I've been overly bearish since doing the show and as an investor. And so I'm always sympathetic to that because part of our job, it's always funny to me when people criticize perma bears, right? Part of your job when you're managing other people's money is to not just see risk and not manage it, but also constantly be looking for it, right? I tell this to my football kids all the time. You don't need to worry about scoring a touchdown, right? We do the right things and good things are going to happen. What we need to be worried about, what we need to be consumed about is doing our job, right? Getting our job done, not blowing our assignment. That's the focus. And so as an asset manager, and I've been there before, I've gotten too bearish at times, but you have these circumstances where anybody with the slightest bit of knowledge regarding, I shouldn't say the slightest bit, but really understanding asset markets, asset prices, banks, the way financial institutions work. It is similar one to me was the quote unquote regional banking crisis of was that 2022, right?
23?
Was it 23? Yeah. And Chase Taylor has entered the stage, ladies and gentlemen. That was another one. We've had several of those. I'm sitting there, we're having a discussion about the Federal Reserve and Steve Mirren and kind of extrapolating on what we were talking about yesterday and just saying that you see it over in economics, over and over and over again in economics, where these things occur and you're sitting there. The thing that, for instance, that regional banking issue that we were talking about, I remember the thing that caught me off guard. One of the dumbest things I've done over the last 5-6 years in investing was not being short the regional banks. And ironically, I wasn't short them for the same reason I wasn't short them in 08, 09. And it was because I never dreamed they were that stupid to let that much stuff pile up on their balance sheet. You know what I'm saying? When 80% of my capital reserves as a bank are at an average maturity date of 10 years plus, and the prime and the Fed funds rates is 0, and the Fed is telling me that inflation's a problem and they're going to have to raise rates, and I don't try to, dude, I just never dreamed that any of them would just sit there and let that train hit them.
But before that, they were told, hey, we're going to keep rates at basically 0 for, like 5 years. So they did get kind of okey doked a little bit.
Yeah.
But that's what you get for listening to the Fed and taking it as gospel.
Well, and this gets back to the whole point I was saying is there's some big, my own attitudes toward the Fed and economists have really evolved over time. At first, I was looking at it kind of like the guy screaming into the wind, right? That they're idiots, that they're trying to hijack the economy, because you look at it from the outside looking in, you're like, once you understand what they're trying to do more, though, you have a little more sympathy for them. My whole point is saying that's why they so desperately need an injection of diversity of thought and a diversity of background, a diversity of experience. And I think that can be a microcosm of the culture. I'm sensitive to it. I'm married to a Black woman, but I just spurn every time I heard we need more diversity. And it's like, pardon my language, who gives a shit what the color of somebody's skin is? I don't care. Right. And the analogy I was using is, oh, well, let's hire this guy and bring him on the board. He's an Indian kid. His family's from India. Well, yeah, his parents were born in India. He was born in Bel Air, and his dad just got a $50 million AI bonus to sign on with Meta, right? That is not diversity of thought, right? Having that kid on your board because he's got extra melanin in his skin is racism. It's not diversity. You know what I mean? And so you look at that. I don't give a damn how many Black people or Asian people or how many females are on the FOMC. What I care about is their experiences, their background, the way they view things. If they happen to be, now, do I think you're probably more likely to find true diversity of thought by mixing in people that look differently? Probably. Like that's probably going to be the way it ferrets out, but that's not going to be the criteria I use going into it. You know what I mean? I want diversity of thought. And that's what excites me about the potential of somebody like Steve being on the FOMC. Because to my knowledge, if you put him on the FOMC right now, well, I guess he is on the FOMC right now, isn't he?
Now, yeah.
About
to be
for
like
temporary,
a day or two or whatever.
Yeah, on a temporary basis.
Right.
I believe he will be the only person on the FOMC that has actually been a practitioner in financial markets. Because Powell worked for a private equity firm, but he was legal.
Beth Hammock was the Cleveland Fed president, was Goldman for years, and like doing bond trading and all kinds of stuff. So
okay, so the guy sitting in front of me right now with a Cleveland Browns shirt on is advocating for the Cleveland Fed. Hey, of course you like her.
I was pumped whenever she got the job because she can't, she has a real background in risk markets, right?
I mean, Cleveland always gets it right.
Exactly.
Yeah.
That river catching on fire had nothing to do with us.
To be fair, there were a lot of rivers. There were several rivers that caught on fire. Pennsylvania had a couple flaming rivers too, if I remember correctly.
We always talk about how we hollowed out the Midwest. At least we cleaned up the river.
Oh man, I love.
If that was the golden age of Cleveland, it wasn't all good.
It was the Gilded Age.
It kind of was.
Yeah.
My dad was working a steel mill whenever it happened. So.
Jeez, was he there when things started slowing down? Because things didn't really start slowing down there till what, like late 70s, early 80s?
That was exactly when my parents moved to Texas in the late 70s.
Gotcha.
Yeah. And it was back then. It was Japan taking
right.
everything, not China. So, and the steel mills and Cleveland started to go away because a lot of it was relocating to Japan, and that was when he pulled up stakes and went south.
We've talked about this too many times, and I keep forgetting to look it up. But I want that Michael Keaton automotive movie. What was it called? Oh, Gung Ho. That was the name.
I have not seen this.
It's such an interesting movie. Looking, I
was thinking Tommy Boy when I think of automotive movies.
It's kind of similar in a weird way. There's some similarities, but it's just an interesting movie right now, because it deals exactly with the fears that you hear echoed about us in China. Now, I think the fears with China are much more legitimate in terms of their size and overall muscle. But, same area of the world, same issue. They're out competing us on manufacturing. How do we answer? So that's my for a good old Michael Keaton movie and a couple good laughs, but some interesting cultural observations. I think it's an interesting movie because they really capture the cultural difference in it, right? Like how serious those Japanese auto workers were, and man, what a tight ship they ran, and how that really conflicted with American culture at the time. And yet, I've bashed on the American automakers a lot. We talk about how desperately competition is needed. To be fair to American automakers, look how much better American automobiles have gotten since the 80s. And the main driver of that was Japan.
Yeah, 100%.
I mean, until Japan entered the market, U.S. automobile manufacturers were fine with a vehicle life being 60 to 80,000 miles.
The best thing you can do to make things better is allow competition. That's just bottom line.
Yep. That's what drives me insane when people start pulling in the socialist answers again. And I'm just like, because the minute you get into that debate back and forth, it turns into an ideological debate, right? And you're wrong. Capitalists have hollowed everything out, And you go, yeah, but okay, fine. But your way just doesn't work, right? Like if we're in a plane that's going down, I'm going to listen to any and all ideas about how to rescue that. But if your answer is to blow a hole in the floor and all of us jump out without parachutes, I'm not, please be quiet, move to the back. You know what I mean? And I kind of feel like that's like that when a Mamdani or any of these guys come, oh, we're going to fix this with the lack of competition and government taking over more things. And you're just, okay.
But I'll throw back at you. Tariffs is just institutionalized lack of competition. So that's where my fear is that the I'll call it the intellectual right that used to be very free trade has gone all the way to the extreme of the protectionism side. Too far is the point I'm making.
I think it's a hard argument to make when you look at all the carve-outs that have been done. I mean, I think the headline numbers, if they were true, I would agree with you.
The effective tariff rates is close to 20%.
Yeah. Now,
and on a lot of things.
Well, and this has always been once again, I feel like there's so much more nuance in this discussion than people acknowledge. People have always been, well, you're all about tariffs. No, tariffs are horrible.
You've been very consistent on that from the jump.
Anybody that argue, like whenever I hear him say you're going to love tariffs, I'm just like, I have to assume that's just him negotiating or whatever. And I could be 100% wrong. Maybe he actually does, but tariffs are just a tax that consumers pay. I mean, it's just that simple. I don't care what anybody says. Right. But here's the deal. I'm all about free trade, but free trade has to be fair trade. Right. And for too long, I think we've had trade deals that on the face of them weren't necessarily horrible for the U.S. But when you sat there, like, for instance, there's a reason why a lot of smart guys, when analyzing NAFTA in 1992, perfectly predicted right where it would take us. Right. Those trade deals, to me, when I was saying I was all about that, I'm okay with tariffs. I'm okay with tariffs if they get us to a better deal. Right. Making the argument that tariffs should be an ever-present feature.
Right.
I just don't know how anybody can support that, because that comes straight out of consumer pockets.
And I remember all the way back when the reciprocal part came out, and I remember we agreed hey, that can make sense. The problem is a lot of these countries that we've done the deals with, like the Vietnams, are like, cool, you just have no barriers left in our country. You can do what you want. And we're like, okay, cool, 15% tariff for you, or 25, whatever it is for them.
Yeah,
so we have left them on for no other reason than that country runs a trade surplus with us. And
it's impossible.
As far as the application goes, that's obviously, to me at least, obviously mismanaged. Something.
And to your point, I agree with you, especially with a country like Vietnam, because I think having very cooperative and very good trade relationships with countries like Vietnam will probably benefit us in the long run far more than any tariff revenue that we get off of that relationship.
Yeah.
Full stop.
But we do have to be careful with it just becoming a place for transshipment, essentially.
Well,
and we have said we'll put giant tariffs on transshipment. I think one of the most important things with all this policy is going to be, what do we actually do with that? Do we no kidding find some stuff to go, this is transshipment, boom, there's the big tariff on that? Or do we kind of just go, let's just let it happen?
I don't know. Well, and that gets us to our next conversation. Like a perfect example of this, and one of my frustrations with the administration at present is the shooting from the hip feel of so much of this. Today, watching the gold price get whipsawed because we announced a 39% tariff on global gold shipments, right? On bullion.
Yeah, it's essentially coming from Switzerland because that's where most of it comes from.
So here's the one thing. Look, the one thing I will be extraordinarily critical with this administration over, I think oil is a little bit different. There's some interesting nuances in there, meaning I'm not saying I agree with it, but I just think there are nuances involving oil that are not present in other commodities. But somebody needs to walk me through how tariffing steel, copper, and gold help us at all. And more importantly, how it helps us rebirth a manufacturing sector. And that was a point you were making earlier. I don't know.
I've known this throughout, and it's been, the stuff I've been, let's call it preaching, because that's reality. But it kind of like bubbled to the surface like yesterday for me. Like if you ran on kind of the reality that we're currently sitting on, it would sound completely nuts. Now, if you say tariffs because, that we've been getting ripped off and we're going to get the jobs back, like it sounds good. But if you ran on, I'm going to revive U.S. manufacturing by making almost all raw materials more expensive, by making, all your tools and your industrial machinery that you import more expensive, your chemicals, and basically it's hard to find an input to our own manufacturing, circuit boards, microchips, whatever, that isn't facing a tariff. And if you ran on that to say, I'm going to make all these things more expensive to make our manufacturing great again, like everyone would look at you like you had 5 heads and just be like, that's not going to work. But when I kind of zoom out and just look at like, what have we actually done? It feels like that's kind of what we've done. To your point, like though, if instead of saying, hey, giant tariff on steel, all of it that comes in, period, steel, huge tariff, instead of saying that, if we were like, all right, American steel, you have to make this much and we'll subsidize it until you make this much. So kind of a level that's like, all right, at this level, we can make most of what we need and take care of the military and stuff. Like, I think that you can say that makes sense. But all we've really done is make our steel for our producers twice as expensive as it is in China while we're trying to compete with China.
Well,
and it's literally twice as expensive.
And this gets to my point. I wrote down something while you were talking, and that is, to me, going into this, my impression of and the way that I would have used tariffs had I been, at the helm or whatever. I think the way tariffs should be used, if they're deployed at all, is like a shot clock, right? Sitting there saying, listen, we don't want to do this. We don't want, but we also know that the way things currently sit, you have no incentives to change. Okay. So here's the deal. We don't want this tariff to hit either, because it's going to hit our We recognize, we're sane actors. We recognize.
It's like you don't want to bench your best player for being a jerk.
Right. Right. But we're going to have this on because this is the incentive. And if we don't come to a conclusion by this date, this will be the reality. And even then, I've long thought that, especially let's focus on steel for a second. If what you're doing is truly aimed, and I have no reason to doubt the motives. So I think that their motives are what they say they are. But if you really want to kind of get a rebirth of American manufacturing, then what you need is American production of those commodities to pick back up, right? You need domestic production. So if you're going to slap on a tariff, it would seem to me, and if you're going to use them the way I think they should be used, like a shot clock, maybe you should stagger it out over a 3 to 5 year period of time, right? So therefore incentivizing, you got to cut some red tape big time here in the US. I mean, bring it.
No doubt. That's one of the things that makes us less competitive. One of the big things.
Yeah. And I don't think people have a really good understanding of that in the US. Now, it's not a quick process really anywhere in the world, but in the US, let's say you find a really good resource base. As you're out there exploring around and you find an incredible resource base that really looks promising, right? You're like, okay, we can build a company around this. We believe the economics are right. We can get, once you find that resource base, if everything goes as according to plan, permitting and all that kind of stuff, you're probably 15 years out from pulling anything out of the ground. And the majority of that is red tape.
Yep.
So my question is how do you rebirth a manufacturing sector if I'm tariffing steel that it comes into the country at 50% and I'm not simultaneously addressing domestic production? You know what I mean?
Yeah.
And that's why I'd be in favor of sitting there doing it kind of on a sliding scale over a 5-year period to give,
Right. But to that same, now they did, back off on a lot of the copper stuff. They're, they carved out all the refined copper. But when that was in place, you're like, okay, like you're going to make people pay 50% more for the next 15 years until they can get their mine open. Like that obviously doesn't work. You're just making things more expensive for no reason. And same with our aluminum, think about we're losing smelters and refineries and stuff. Okay. Well, like to me, like, I hate to say this just because it sounds bad or in some ways, but like a hybrid between the sort of Biden approach of throw money at it and the Trump approach of just end imports or make them incredibly expensive is like, do a little bit of both. Like have a tariff, like you say, I agree, shot clock. And they're kind of doing that with pharma. Maybe it sounds like stepping them up, but also like, yeah, like let's throw some money at it, some subsidies or whatever and obviously cut the red tape out of the way. Just like a holistic approach instead of a red hammer or a blue hammer, because both have like a lot of bad unintended consequences. You just start throwing money at certain sectors, like lots of bad stuff happens in that. And if you just make all the imports crazy expensive, a lot of bad happens to that. But if you really targeted, do a little bit of both, and obviously cut the red tape in a meaningful way, then I think you can kind of get the outcome you're looking for.
Well, I mean, the flip side is maybe the thought is that like lower profits and condensed margins are our path to prosperity. I mean, if you look at what it tacked on an extra $450 billion in market cap to Apple this week. They're like, this is our way to higher stock prices. Anyway, I'm not trying to flip the conversation, but I'm still finding that movement on Apple stock to be very funny.
It's weird.
It is.
Unless they had a breakthrough in AI that we don't really know about. It just doesn't make sense to me.
It is weird, but I was talking with Jamie, our junior analyst. And I know Chase knows who he is. I'm just saying that to you guys. Our junior analyst on the phone today. You know what it kind of reminds me of? Newmont. I mean, to me, it kind of feeds. I'm not saying this is what happened, but we've seen this pattern over and over where fundamentals seem to kick in to a company for a while. And then it's almost like the marginal sellers get exhausted. And then like kind of like the last bit of marginal sellers are the shorts. I think about, we pulled our short on Apple. We made some decent money on it. We pulled it right around 309, 310 on the stock price. Doesn't that sound about right?
I have no clue.
Anyway, it was, I believe it was south of 310. And I think it was you that said it, because we tried to break through that 200 level. We just couldn't sustain it. And then you saw it pop a couple days up to that 208, 209. You went, let's get out of the way of this thing. But my point was, I think that what you could be seeing with Apple, and I think that what you could see with Newmont, is really a fact, like it's right up Mike Green's playbook, right? Meaning, so the marginal sellers beat the hell out of the thing, which usually causes the entire index not to do that well, which precipitates broader selling of the index. Everything kind of gets hit, and then it kind of runs its course. And then all of a sudden you look, and even though that company got taken out to the woodshed, it's still at the top 5, top 3 of the index. And all of a sudden the passive flows start making a bigger and bigger percentage of every day's trade. And then all of a sudden that thing just shoots up, right? Because it's all out of marginal sellers. They've already exhausted, they're all done. And passive takes over, and you just up you go.
And it did stay flat to down for quite a while.
Yep.
So, a lot of things have done great, and it hasn't. So,
and the reason I brought up Newmont's a classic example of that. Like, if you go look at Newmont's run this year, it is not because that they've fixed anything or they've gotten better. I think they just ran out of I think they ran out of marginal sellers right at the time that gold started getting a big retail bid. And then their GDX is up 61% on the year. Newmont's up 66. Everybody's like, boy, they must be doing really things really right. No, they're not. They're still not. That company is not performing well. They've got garbage management. But if you're getting 25% of every dollar that flows into GDX and you've blown out all the marginal sellers and there's nobody on the other side, that thing's going to rip.
Yeah, I think the last few people in Newmont probably gave up. So
yeah,
I think that's a big part of it.
Yeah. That's total capitulation and shareholder fatigue. But then, like I said, that alone shouldn't rocket the stock. But now it turns into a one-sided bet because like I said, every dollar that flows into GDX, I think they resized GDX. But at the time this was happening, that was a very recent resizing of it. But Newmont was 25% of GDX.
That's crazy.
Yeah. And so,
but one interesting thing though that kind of counteracts that it really is interesting is that GDX has had pretty consistent negative flow even during this really, really impressive run.
How is that even possible?
I was listening to
it must be because you know what it must be. The money, a good chunk of that money must be flowing out of the ETF and flowing into the individual names.
I don't know. I think his name's Robert Mullen from Marathon Resources, a resource hedge fund out in San Francisco. He was on with Kevin Muir this last week, and he talked about it. He did some work on it to see like how rare it is to have like a leading ETF that's up huge, have like negative flow throughout that, and it's exceedingly rare. So it is a bizarre thing to have happen.
And you're seeing more and more of these bizarre things kind of happening in the markets. I think we've crossed over that 38th parallel of what Mike Green has been talking about for so long. And you felt it be more and more of an impact, more and more of a weight. I just feel like we've crossed over some event horizon where now the passive flows are just in control. Really, right? Where
it does feel that way like the last couple of weeks.
Yeah.
Where the Qs are now just, smashing the S&P, totally obliterating small caps, like
regardless of earnings.
Yeah. The market cap, like size factor, call it, has shown itself a lot lately.
Yeah. And value has gotten faded hard. And what's funny is like over this, it's only been a couple weeks, but international's kind of stalled out recently too, compared to it. We're back to looking like it looked for a lot of the last 10 years where the Qs are running and it's just sucking the oxygen out of every other part of the room.
Yeah. The S&P is definitely, since the capitulation on the tariffs, even though that came back, like the S&P has beaten VEU, the all world ex-US. So the last few days have actually been decent for the rest of the world, which honestly sort of surprises me. But
it just feels to me like, broadly speaking, and there's always going to be pockets and exceptions, but broadly speaking, I think we've finally reached that deal where, not to say fundamentals don't matter, but they are a far second, maybe even third place to flows. The flows are determining price.
They're the fundamental is the way I see it. Yeah.
Right now.
Yeah.
And look, people can make an argument and be like, they've always been the fundamental, right? Like more money in. True.
Yeah.
But what we're saying is that the way the money is getting into these securities is different than it has ever been.
Right. Like 30 years ago, you had a pension at work and they probably put it into some relatively benign stuff.
Oh,
now no one has a pension and everyone has stocks.
Yeah.
Even federal government workers and stuff like the military is moving to a hybrid where part of it's a 401k and part of it's, like an old school pension. So yeah, we turned it into a retirement utility and it obviously changes the way things work.
Yeah. It's, it is wild though to see these movements. Like I said, and look, always keep an open mind, right? Maybe news comes out in the next month that justifies this run up for Apple. It's really hard to imagine. The other reason why I throw it out there,
imagine it.
You have to imagine it. You have to always have an open mind. And if you don't, just please take it from me. An open mind is far more expensive than a closed one, or is far less expensive than a closed one. The issue I have for that is you pointed that out. Like I'm sitting there going, okay, maybe they do have some kind of breakthrough that's coming on the AI side. Maybe it's that if they did, based on conversations that I've had with really plugged in people into that universe that are like laughing at Apple, saying that they're completely out of the game. If there was that going on, you'd expect to see insider buying.
Yeah, that was the first thing I did today.
Yeah.
It was like, all right, let me see if there's insiders in here, because if there are, then I'll think, all right, maybe something's about to happen here. So far, there isn't. So
yeah, it's just chalk it up to more things you'd think you'd never see, right? You hear that announcement and what they're talking about, and you're like, so increased CapEx and lower margins.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ.
And, speaking of sort of interesting, Meta just announced, I think it's like $29 billion in funding from Blue Owl. So essentially private credit to fund some of this AI CapEx. So we're reaching the point, at least for Meta, where
Meta's borrowing money now?
Right. So where it's not just going to come out of cash flow. And because, the hyperscalers have so much cash flow that they've been able to just pay for this.
Yeah.
With cash. Now they might have to start dipping into credit markets to do some of this. If you extrapolate 26, 27, if this stuff keeps linearly going to the moon, if they're going to build data centers as big as counties and crazy stuff, like, okay, and have to wildly overpay for electricity and everything, the whole 9 yards, like, yeah, you're gonna have to borrow money, and then like it's weird because you feel like this could be the thing that makes these $50 trillion companies, or the things that make them go down 85%. Like it's such a potential winner take all, and a potential, like, just the most historic misallocation of capital in history. Like that potential's there.
I'd even push it a step further, and I'd say when you look at the level of investment in CapEx, I don't think it will end up being anything in between. Meaning I think the two outcomes that you just laid out, I don't think it's somewhere in between. I think it's either or.
Right. Unless they pivot right in the middle because they realize, oh, we don't have to do it this way or whatever. But clearly the big players think that this whole superintelligence, like true general AI stuff is like achievable, and it's out there and it's close, and they have to win it to win everything, or they lose, Well, it feels like Meta, like, truly is just gone all in, and not in like a silly metaphorical sense, but like a literal, they're willing to go, like, to die on that hill of doing this. Like,
yeah, but it doesn't surprise me from them. That is a Mark Zuckerberg kind of feature, right? He was saying actually very similar numbers and a very similar attitude as it related to metaverse. You know what I'm saying?
But that CapEx pales in comparison to this CapEx. I mean, this is...
Well, he was talking about 20, but well...
Yeah, this is hundreds of billions.
Yeah, that's true. That's true. Because they've already invested tons in it. Now they just announced another 30 billion.
They're spending maybe billions on people right now. So,
jeez, I know, man.
Speaking of the Tesla Dojo team, just disbanded because they're losing talent to other people and stuff.
Dojo.
They have some like big data center initiative, AI initiative inside Tesla, and they just shut it down.
There's another head scratcher. I mean, that it has been for a really long time, but watching Tesla move this week, part of it's because we've got a small short position. Well, it hasn't hit our stops, right? I mean, we've made a lot of money on this short, and we got to kind of stick to our rules here. But you've seen overvalued stocks before. You've seen stuff that doesn't make sense before. But watching these companies move up in the face of news that should not make them go up, but news that should make them move sharply lower. Like, I understand if an NVIDIA or a Broadcom or an AMD or a TSM or a Google or one of these companies that's really involved in the game, if they came out and announced some big CapEx toward this, I can understand how that would make that stock go up, even though it means they're spending more cash. But when you're talking about the announcements that are driving up Tesla and Apple, that's where I'm sitting there going, guys, hold on. Not only does this not make sense on a 1-year cash flow basis, it doesn't make sense on any basis.
Right.
Right.
And
like we were talking about yesterday, they're making their glass in China right now. Why? Because it's cheaper.
Right.
So why manufacturing glass in the United States? Why does that make you want to bid that up?
Yeah.
I love compressed margins.
Don't get me wrong. Like if you read Apple in China, you realize like how much Apple did for the whole ecosystem in China by throwing so much money and know-how at it. So hopefully them coming back to the US and throwing a bunch of know-how and money, at Houston and Detroit or whatever, like makes a big difference and helps us in a big way.
It's not going to help them.
But all I can think, and as an American, that's what I'm rooting for. That's all to work out. But all I can think is it's going to make you less competitive. And going back to the gung ho thing, like we talked about this before, but there was like a documentary about a Chinese company coming into the U.S.
It was the Obama one.
Yeah, right.
Yeah.
Setting up that factory, and I can't remember what it's called, but that's a good one to watch for people too, because you just see like the differences. Like you're talking about the cultural differences, like where, the Chinese boss would just flabbergasted at the lack of like work ethic in some of the people, or like, oh, it's time for us to take a break, and they're like, what are you talking about? Like,
yeah,
get back. Like, why are you not working? Like they were just and it wasn't like they were mad; they were confused. Like it did not make even compute to them, when people wanted X days off or whatever. Like it was that big of a gap. And when you think of that stuff, you're like, well, yeah, like of course they're going to outcompete for, building displays or whatever. Like,
I'm going to sound like such an old guy when I say this, but it's true. Meaning, I cannot tell you how many times over the course, and a part of this is because I run a business and have employees, and our employees are great. But I cannot tell you how many times, whether it's coaching football, talking to parents, where there's just this kind of like laissez-faire malaise, like,
yeah.
Well, I want a really nice house someday, but at the same time, work-life balance to me is important. And I'm looking at them going, you're 24. Work-life balance. The right answer, if you're looking for the right work-life balance at 24, it should be 100-0. If you want to get anywhere, right? They're like, well, yeah, but that's not fair. You're like, well, listen, pal, I didn't bust my hump for 15 years making barely enough to live on. So you could just get the same thing via a birthright. You know what I mean? Like if you want an extraordinary outcome, it requires extraordinary inputs. It requires risk. And I know people are like, oh, this is the same thing people have been griping about. But if you're not interacting with this on a daily basis, and I know that it's the majority of people out there, so naturally most people listening to this are going to be like, oh, you're dogging on America. You're dogging. No, it's just, I'm telling you, as an employer, it is shocking. Some of the things I'll hear in interviews sometimes, or people, looking for a job, and, it'll be a young guy like feeling me out for a job, kind of asking some questions, how do you get it? And then in that conversation, as a 25-year-old with no real experience, asking an owner of a company, somebody brings up in that initial conversation, time off. And, I really value and I'm just sitting there looking at him going, well, you just blew your chances of getting hired by me. And second of all, like I almost want to pull him aside and go, hey, anybody you want to work for, don't ever say that in front of them.
Yeah. Luminaries negotiate that in the first conversation, not functionaries.
That's a really good point, right? The guy that got offered $250 million from Meta,
he can say whatever he wants about time off.
Yes. He could dictate his own hours. He could dictate a lot of things,
but he got there with, I'm sure, insane work.
Oh,
to be that good at AI research.
Have you seen a picture of him?
No.
I'm pretty sure that's all he does.
Right.
Yeah. Let's put it this way. He didn't waste a lot of time dating girls in high school. I can promise you that. Okay.
More of a this is my quant kind of guy.
100%. And even though he was born and raised here in Washington State in the United States, saying that a guy like that speaks English, like that's like loosely, right? I mean, yeah, he might speak English, but good luck having a conversation with him. Now put him in front of a computer, magic's going to happen. But no, to your point, go look at him. I guarantee you that dude's got he's got some times where he spent 24, 36, 48 hours working on this stuff with never stopping, not sleeping.
I mean, it's like you read about like Bill Gates pulling 72-hour, uninterrupted work episodes, then crashing for 10 hours and then waking up at 3 a.m. and getting back after it. Like,
and this is why I was getting interviewed the other day and they were asking me about kids and work ethic and all that kind of stuff. And everybody always says it. And I kind of just passed over it as a kid, but it's why do what you love and the work will follow, because people are like, I could never work that hard. You can, if it's not work.
Right.
Right.
I could never work this hard if it was like laying bricks, right? I just moan the whole time.
Oh man. We were out, my wife and I, but for the listeners, my wife and I took a few days and to a house last week. And there's one point, it was like noon and I'm sitting there reading an earnings report of a company, around, and she's like, what are you doing? And I go, well, I got to check out the earnings report. She's like, we're on vacation, and I'm not, when I say that, I'm not sitting there extolling myself as
the opposite.
Yeah, no,
I hate that about myself.
Yeah. Well, yeah. And it's hard to sit still, but B, I can't disconnect from the market for 3 days. I can't do it, but it's because it's what I love to do. It's something that's endlessly fascinating. And that, trying to explain that to kids, look, if you want to compete in this environment, you got to find what you love to do, and eating Cheetos and playing video games doesn't count. You know what I mean? We got to be realistic about it, but you got to find something that you're intrigued by, because I remember kind of figuring that out probably around the age of like 32, 33, realizing that no, I need to tap into this passion that I have for that, because that's going to be the edge, right? That's going to be what keeps me grinding at it. That's what's going to keep me, excited to research and find new companies when I just took a 40%er to the face,
Right.
But
yeah,
that's a lost art in America today.
Because if you don't do something like that, you end up competing with people that do, and you cannot win.
No,
if you're in the restaurant business and, the guy across the street is, pulling 100-hour shifts, like experimenting with new food endlessly and like
you're done.
Thinking about moving the table 8 inches because it might open up, this new avenue to, like something like whatever, like you're going to lose.
Yeah.
So
yeah.
you may as well find something you like that much, or you just can't compete.
Yep. And why? Because he likes it. Right. And good luck with that. It kind of reminds you of that Robin Hood line, or not Robin, that Batman line. When he's talking to Bane and Bane's like, I was born in the dark.
Yeah.
No, it's, but it's the same kind of thing, right? No. I love it. I'm comfortable here. You're working. I'm just chasing my curiosity.
Right. Just as Warren Buffett said, you skip to work every day.
Yeah. I love that. The other day I was listening, I've heard it before, but I kind of feel like a lot of Buffett's stuff is, I don't want to be blasphemous, but it's kind of like it's kind of like an investing Bible, meaning I read the Bible every day. And when I read different parts of it,
it's just like the Proverbs chapter comes from Berkshire.
Yeah, there you go. Yeah. It aligns a lot, but you read different stories at different times and they hit you differently, and you see something different. And a lot of Buffett stuff is like that. He was talking the other day, or I was watching a repeat of one of his famous interviews that he's done over the years. And right as I'm saying this, I'm going to lose track of what I was going to, what part. But, he talked about the skipping to work, but this was it. He also talked about, look, this game does not require an extraordinarily high IQ. In fact, if you've got 160 IQ, feel free to give 30 points away. You're not going to need them, right? It's
you don't need above 5th grade math either.
Nope, you don't. But you got to have curiosity. You've got to have passion about it. You've got to be the analogy that always comes to my mind is the old analogy about the kid digging through the pile of horse dung, right? There's got to be a pony in here somewhere.
Right.
And that has to be your attitude. And if it's not, you got to go find somewhere it is, or you're just not going to be able to compete.
So I have a fun example for this that I just read yesterday in a book. It's about Jim Rogers. And this is back in his Soros Fund days. He was watching the news. This is when, was it 12 Days War? I can't remember which war it was. The Israelis and the Egyptians. And he keeps seeing these news headlines about how the Egyptians are kind of winning the air fight. And that doesn't make sense because everyone knows the Israelis have better jets, better pilots, better training, the whole nine. So he just like, well, that's interesting. Like, so he starts digging into it, and he finds some stuff about how it's some like electronic stuff that maybe they don't have that's that good in those great jets. So then he just keeps going like layer after layer and figures out, well, who does make this stuff? He starts calling up Congress people and asking them about it. And they're like, yeah, what we're hearing is like they don't have enough of that. So he just recognizes, like, he's talking to people at the Pentagon, like, oh, they're going to have to splash the pot to upgrade this, to get it to Israel, not to mention our own jets probably.
Right.
Sure enough. And this is in a period where like defense stocks are like the worst. Like it's like energy in 2020. No one wants to touch this stuff. So he's buying Lockheed Martin and a couple other small companies that are in this like supply chain. And everyone's like, what are you doing? All this stuff goes up like 20x the next few years. Like, and all just from like, he's watching the news and sees that one side's losing a little bit in the air war. And his curiosity takes him all the way to 20 baggers, like it just, good luck competing with Jim Rogers because the average person watches that news and they're like, oh, that's interesting. Next, like,
Israel's in trouble.
No one's thinking like, where's the trade in this news,
Yeah, no, it's well, it was like Druckenmiller, one of his first big trades, right? That little skirmish popped off somewhere in the Middle East, I want to say. And he just dumped everything, filled up on defense stocks, and was up 85% that year, same kind of thing, but it's,
and he could have done it this year in European defense stocks, knowing that Trump was going to go after the Europeans for defense stuff. Like it was there.
Stevie Cohen, when he used to go on vacation, he would have, and I don't know the specifics of it, the story I heard is that he'd have his group or whatever, wherever he was going to be staying on vacation, they set him up his trade station wherever he was going.
I know.
He went like 10 or 11 years without missing a single day in front of the screens.
I can't remember his first name. His last name is Bacon.
Sir David Bacon.
No, I'm talking about he's a hedge fund dude. I think it was more cap, but he would do the same thing. They would fly ahead of him and set up his desk and everything exactly as it was, in New York or wherever. Yeah, it just trips me out.
And well, and I think that in my younger years, I misread that, and I think a lot of people do. They're like, what an and look, is that an extreme? Yes, but the reason, if you talk to those guys, they can't stand not to be in it. That's what it is, right? It's like the fear of missing out. They're not doing it because they're like, I'm going to keep working and have a hard work ethic. They're doing it because they can't stand to be detached from what's going on. Druckenmiller still wakes up at 5 in the morning. What is it, 4:30 in the morning? Because he likes to be up for the Asian Open.
Right.
I mean, you're just like, yeah. And my thought all the time is that's what you're competing against.
Right. And he's an old man and a billionaire, and he's still getting after it like that.
Yep.
So yeah, good luck competing with him.
Yeah.
It was just like Tom Brady when he was 40 and had already won a bunch of Super Bowls and made a bunch of money and had a supermodel wife, and like he's still out working.
Yeah, he grinding.
Yeah,
just because he loves it.
Right.
Right. And that's the thing. I think that I wish I could tell young people. The other thing, tell them too, is, hey, if you don't feel that way about your current job or profession, don't beat yourself up. It doesn't mean you're a bum. What it probably means you probably have to do some work on that too. It's a muscle that needs to get developed. But I remember beating myself up early on in my career because I didn't feel like I was working to that level. I was having a hard time engaging.
Right. The potential, it's there and you're not tapping it.
Yep. And then I realized, looking back now, I needed to fall in love. I needed to let go. I needed to quit worrying about these different things and just plunge in. And, I wish somebody would have told me that. More importantly, I wish somebody would have told me not to worry about the work ethic side of it. Get plugged into what you love to do, and then work. You got to push yourself, but you're not a bum.
Right.
What else do you have on it? I got off on a tangent there. We talked about Tesla and the misses.
There wasn't much data this week to talk about, but we do have CPI next week and retail sales, so that's going to be interesting. One other thing real quick is we had narrowed the Fed chair search down to 2 or 3 yesterday, and today it's turned back into 10 candidates. They opened it up. Jim Bullard's in there, which is stressful for me.
You love him.
And a couple other people that like have entered the chat. So who knows where this is going to go.
There is a part of Trump that for whatever reason, he gets off on people being off balance. He loves throwing curveballs. I don't.
Oh yeah.
For the sake of curveballs.
It was like my buddy Jacob Shapiro said, if you view everything happening through the prism of a reality show, it makes more sense. And I think that's usually fair with Trump. Like, you watch a reality show, there's always something happening that makes it interesting. And a lot of it's like prodding from the crew to be like, hey, like, why don't you guys fight about this? And it's like,
That's true.
And I feel like every day in DC, like there is something to chew on every day in DC.
Oh yeah.
There's usually not too many dull moments.
No. And I mean, as an American, and I hope we can pull a rabbit out of the hat. And I hope this stuff ferrets out. I think a lot of the trade deals have, but like you've said, to me, I don't want to make it all not matter, because it does. But to me, it's just like, if it doesn't apply to China, I just don't really know.
I mean, tariffs are higher on India than China.
Yeah, and
that one gets under my skin.
I don't get it.
Even though I kind of understand trying to pressure them into the Russian oil thing if we're going to squeeze Russia, but
God, I just think there's a better way to do it with India. I think India is such a natural ally to us. I think that I think
they're not worth losing over this.
No,
that's the important part.
And I'm going to hope and trust that the administration realizes that. But we just, in the world that we've got today, I very much think that a fast and cooperative relationship with India is essential.
Yeah.
The way I look at the map, I mean, look, you want to be good with everybody, but in my opinion, I look at it, if you lock down the Americas and you're good with India, we're in a good spot.
Problem is, we're also fighting Brazil, and Mexico to a degree. So I don't think we can lock down the Americas either.
Yeah, there's some political things involved in both of those that I'm comfortable with. Meaning, I think Mexico is a problem. I really do. I think Mexico is a problem for our security. I think it's a problem for economic. I think Mexico is a full tilt narco state.
I mean, they definitely have significant challenges there. I don't know how tariffs fix that, but yeah.
I don't understand how it isn't more widely discussed.
Granted, the tariffs there are pretty chill after carve-outs, but
I'm blanking on her name. Scheinbaum. I always forget her name because it's so untraditionally Mexican. You know what I mean?
She's Jewish, yeah.
Oh yeah, okay. Well, there you go. Yeah. That's an odd name for a Mexican national. Well, it's because it's Jewish.
I've never been to a Jewish taco stand.
But no, it's just odd to me what we latch onto and what we don't, right? Meaning, like the border controversy, how many times did we hear over the whole border controversy, regardless of where you're at, that, hey, like an important piece of data in that discussion is that the last presidential election they had when Scheinbaum got elected was the most violent presidential election on record.
Yeah.
Okay. And she won. What does that tell you?
Right.
I don't think you can get elected in Mexico if the narcos don't sign off.
Especially, I think it's even more important, kind of like state, local.
Yeah.
That's where they can, their influence is very significant.
Huge. And then I think you look at Brazil. I think that Brazil has a lot of really concerning political things going on. I think a lot of Latin American countries do.
This is just going to make it worse. Is the problem. Like Lula has skyrocketed in the polls.
Really?
Because of this, yeah. Because now he's the defender of Brazil against
God.
the.
Well, and Trump needs to take some notes on that, because he just did the exact same thing to
Canada.
And Canada. Yeah.
Right.
Just had he stayed well enough alone, that other guy probably would have won, is the way it was looking at the time.
Yeah. I think that was pretty clear.
Well, you got, to be fair to Trump, you got to break some eggs, I guess. But the frustration I've got is something you and I talk about all the time. I am just tired of being in a world where it's this extreme or that extreme, when you're sitting there going, guys, not only are there other alternatives, but there's other really attractive alternatives, right? Like, there's so much of Trump's approach that I like, getting down to business, all that kind of stuff. At the same time, you don't need to do it with a gun,
Just because you can doesn't mean you should.
Right.
Is kind of a thing. And I think one of my biggest beefs is like, we to be fair, like we have stacked up some pretty nice short-term wins on some trade stuff, right?
Heck yeah.
My fear though is like some of its stuff's myopic. It's like nice tactical win, but sometimes tactical wins lead to strategic blunders, right? It's like man, that was a great battle we won. That kind of lost the war kind of stuff. Like I have concerns around stuff like that. Like with India, like maybe you punk India into a great trade deal.
I'm blanking out. There was a famous Civil War battle that was exactly like what you're saying. Was it Bull Run? I can't remember which one it was.
Revolution nerd, not a Civil War nerd, so I'm going to be of no help here.
Okay, but basically the South won, but it ended up being a tipping point in the war because the win was so expensive.
Maybe it's kind of like the Alamo in the Texas Revolution. Like, did Texas lose that? They did, but was it kind of a turning point though at the same time? Yeah. So.
Huge. Yeah. It became a rallying cry for everybody around. It was a black eye on Santa Ana. It definitely deterred.
They took too many casualties. Like,
yeah. 15 Days at the Alamo. You know that movie? You know what I'm talking about?
Really
John
old?
Wayne, Davy Crockett, all those guys were in there.
Yeah.
I as a kid, I just loved that movie.
Same.
I wanted to be a Texas Ranger after seeing that movie.
I knew one growing up. So
did you really?
Yeah.
Was his name Walker?
No.
Oh,
no,
it's too bad. Anyway, enough cheesy jokes for me. I'm good on the week. You got anything else you want to throw in there?
Nope. Good to go.
All right, brother. And as always, guys. Oh, the other one. We're getting this done next week. I know I've been promising, but I'm really pumped for this AI interview we're going to do with this guy. He is right in the thick of things, and it's going to be a fun discussion.
Is he going to be like like Doomberg? Is he have like a talking chicken or something to keep his?
No, you know what's funny, and it's kind of surprising to me. There's certain things he can't,
right,
internal secrets, but they're not muzzling him at all.
Okay.
Like he's got no real constraints. He's like, no, it's fine. Everybody's cool with it. And I was kind of shocked. I figured they'd be a little bit more, especially the company. When we introduce them, we'll tell you the name of the company, but it's just, you're kind of like, really? They're cool with you out on here talking about it? But
and by the way, we just repushed the Stephen Mirren interview from whatever it was last year.
Oh, fantastic.
So
Darren got that back out there.
Yep. So anyone that hasn't listened to that, we were ahead of our we were in front of the news there.
Yeah.
He probably won't talk to us anymore, but that's all right.
Yeah, I don't probably can't, right?
Right, no.
But I remember at the time, it's just kind of a wild deal. Like I said, I'm not personal friends with him. We probably could walk past each other in a room and not even recognize each other. But it is wild to sit there and have those conversations with people and then sit there and go, geez, he just got appointed to a Fed seat. You know,
governor too, not even president. It's a big deal.
Governor, especially young. He's young. Yeah. Is Steve 40? I think he's right around my age.
No clue.
That's got to be pretty young for a Fed governor.
Yeah, seems fair.
Anyway. All right, you guys will have a great weekend as always. You can find us on social media, get the video feed. You just search Know Your Risk Podcast. You can find us on YouTube, Google us, not hard to find at all. Check us out on the InstaFace, as Chase always says, Twitter, at Pinecone Macro, what's your Twitter handle?
Yeah, Pinecone Macro.
At Pinecone Macro. Mine's at KYR Radio. Anyway, have a wonderful weekend, and we will see you again Monday. You're listening to Know Your Risk Radio Podcast, or Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.